In the tiger's neighborhood, a land of make-believe. Won't you ride along with me?
All right. Good morning. Good morning. It is August 18th. It is Thursday. It is 6:31. My name is Scott Redler. I am the Chief Strategic Officer of T3Live.com. Here I am to go over the narrative of the market, what the market's obsessing about, where we can make some money, how do we navigate our different time frames. And every now and then I try and keep everyone a little bit responsible or talk about experiences that I've had. Before we get into that, look at disclosure. Take a look at the chart of the, what do we got there? The spies for now. And let me say hello to some of my dogs around the world. What do we got? We got Tal in the house. What up, Cocho? We got Option Rap. We got from Armenia. I want to play that song one more time because I'm going to do a little story time. Alexa, play Beautiful Day in the Neighborhood. Let's see if she listens. Alexa, play It's a Beautiful Day in the Neighborhood. Today I'm going to tell a little bit of story. What up, Columbia? By the way, I'm going to Columbia with 10 guys for my 50th birthday in October for a little adventure trip. Which, after I'm having a 50th birthday party in town. What up? What up, Canada? Remember this show, by the way, back in the day? What was it called? And then you had Saturday Night Live with Eddie Murphy doing his Buckwheats version. What's up, North Carolina? All right. I'm going to try and use my 20 minutes. What's up, North Carolina? So I'll keep my hellos for another time. All right, Alexa off. All right, so here's the thing, guys. Yesterday, some people on Twitter or on FitTwit thought that I was beating up on Carter Worth, which I wasn't. I was not beating up on Carter Worth. I like Carter. He's a great technician. We've been technicians pretty much during the same time frame. I've shared the TV screen with him. We've done a lot of things together. I just get upset when the media makes irresponsible headlines because investors who aren't as smart as you guys who tune in or traders who know their time frame, they get scared. So I played It's a Beautiful Day in the Neighborhood because it's a little bit of story time. So I want to tell you a little bit of a quick story. So there was a time when, you see this guy, when me and Jimbo, okay, we're really good friends. Okay, I was writing for Real Money Pro, and you can Google Scott Redler, off the charts. I did probably 6, 7, 8 different segments with him. How long could this bull market last? I did segments on Facebook. I did segments on the housing market. So there we were friends. Okay, but friendships are fickle on Wall Street. So all of a sudden, then in 2013. Someone who wrote with us wrote this really, nasty article about Apple. Okay, so here's that. So this is, you know who. This is Doug Cass. Apple's core is weak. Rotten to the core. That was the headline. So in 2013, all of a sudden, he's writing this article, and it's scaring investors, scaring Wall Street. So on Twitter, I go, listen, Doug, I understand that you might think it's overvalued right here, but rotten to the core, you're going to get investors out of Apple. Because basically, they listen to you. They think you're a pro. You're writing Apple's rotten to the core. Granted, you might trade it for a point or two. Listen, I'm a trader. I understand. So what happened there is I called him out on Twitter, and he then came after me, told his good friend Jim Cramer to not have me on CNBC anymore. I was on CNBC since 2008. I still write for CNBC with Patty Dom, who's the editor-in-chief, and I still am friends with a lot of the fast money guys, but because Cass and Kramer were great friends, okay, and I made him, get, a little bit of a Twitter backlash, I all of a sudden stopped going on CNBC, which was fine. I started going on Bloomberg with my friend Alex Steele, and I've been on, Fox Business every Monday thereafter with all my friends from Fox Business. So with that said, yesterday Carter came out and, and he didn't make the headline, and he actually even said it. There's no exclamation point. It was Apple sell everything. I'm like, a lot of people watch, CNBC, and all of a sudden, if you've been in Apple for 5 years and you sell it here, it's hard to buy it back as an investor. As a trader, listen, I agree with Carter, where at this point, look at Apple. It's very overbought. okay, and it's had a big run. The time to have really been long Apple was probably more like 147.50 when it took back all the moving averages, and you could have ridden the trend all the way up to 176. So yes, this is what you call a frozen rope type of trend where it's been riding the 8-day up. And as a trader, maybe there's a cute short, but there have been people shorting Apple since about 155 and then getting their butts kicked. So you can't just short Apple. But the thing I get upset about with the media is that they try and take these headlines so people get page views and they say irresponsible things, in order just to, get the views so they get the advertising, etc. So for someone to say Apple, sell everything, if an investor goes out and sells everything and it doesn't pull in, chances are they're out of Apple for the next few years. So I just get a little upset when the media, makes these headlines that are like rotten to the core. Oh, is it overbought? Maybe do you get a better entry? Can you trade it? So really, it's all about your time frame. What is your time frame, and how do you approach the market? Are you a long-term investor? Are you an intermediate trader? Are you a swing trader? Are you a prop trader? Do you get paid monthly? Do you get paid quarterly? How is it that you approach the market? Or you could do them all. I try and do them all because I've been doing it for 22 years. I have a long-term 401k account. I have a Sun's 529 where monthly flows go in because long-term the bull market will win. I have a cash account that I put to work twice over the course of the past 3 months, and I've already clipped out 14%. That's there. And then I have the active approach where I have an active account, a swing account, and a box account that I try and take advantage of active sequences so I could profit using timing mechanisms and a tier system and chart patterns and moving averages. So therefore, I can get paid quarterly because a big percentage of what I make is from my trading, and I do it quarterly. So anyway, so that's why lately, a day or two ago, I'm like, you know what? We are a little bit overbought. The oscillator, if you look at the SPYs, the oscillator was plus 56 heading into really Monday. Okay, or this was Monday. Then we hit 431.73. Yesterday we pulled in a little bit. We're still extended from the 8-day. It's been a heck of a run. So we're at the spot where, okay, are we going to see the 8-day or are we going to see 435 to 437? And it's hard to tell. So as an active trader that's trying to ride a trend, you don't want to get caught, chasing things, but you also don't want to miss out, and you don't want to get caught shorting too early because chances are you can't stay with it for when you're finally right. So at this point, it's a weird spot in the market on August 18th with Jackson Hole next week. Because I was just talking to my friend Peter, you definitely have like 8 reasons you could be bullish here, and you probably have 8 reasons why you could be bearish here, right? We definitely had peak inflation, I think so. We definitely had peak Fed hawkishness. Maybe they're going to do a half in September, maybe a quarter and a quarter. You definitely, I think, have peak oil. I think we're getting close to some kind of maybe some pause in the Russian invasion of the Ukraine. Zelensky's meeting with Turkey today. You definitely have better than feared earnings, and the consumer is hanging in there. So there's a lot of things that the market was, obsessing about that's behind us. But then, hey, maybe that's why we had this portion of the rally. And then you have the bearish side say, hey, well, housing is corrected because rates have gone up, and chances are housing can get worse. Or we're starting to see a little bit of a slowdown, and the jobs market's catching up because all of a sudden now, we don't have 8 million jobs open. And remember that? They're like, oh, we're in a recession. I'm like, how do you have a recession when there's 8 million jobs open? Usually a recession happens when there's 8 million people looking for jobs. But anyway, so either which way, we're in a weird spot, and everyone's trying to talk their book. At this point, it's hard to get excessively long, but anybody who's been trying to be short has been getting hurt. And anyone who's talking about being short Apple has probably been shorting Apple, and it's been going against them, and who knows. Because if we go sideways here, just to let you know, if we go sideways and just say pull back to the 8-day and we go sideways and digest for the next few weeks, or even go as low as 420-ish, okay, and hold there, and then we go up again, and the Fed just say is close to being done, and the war in Europe is close to be done, because that means oil prices go down. And if all of a sudden we go sideways and then we do start heading back up into the fall and we don't retest the lows like everyone said. During the pandemic, every single person, if you go to the weekly chart during the pandemic, okay, I remember this, every single person out there after this rally, if you remember, we had this red dog reversal low. I remember coming into here, okay, we came into here, and every single major billionaire hedge fund was like, we're going to go back and retest the lows. We're going to go back and retest the lows. Too far, too fast. Which Could have made sense if we would have gotten rejected there, but instead of pushed through, did another flag, pushed above the prior high, and that happened. And I'm not saying that's going to happen. All I'm saying is every single person and their grandmother said we were done, that we were going to retest the lows, and we didn't. So now let's say where we are now. So, here we are within the weekly chart of the S&P cash, and we have had a nicer little move. So if you make it closer, we just pushed as high as what? This was a 431.73, so I might as well update the chart, right? 431.73. That is the high of this week. We are extended from these moving averages, so it wouldn't be so bad if we actually came in, back towards this 416, where if you remember we paused, punched through. So if we come back to here, that wouldn't be so bad. Everyone's saying we have to retest the lows. If those are all the way down there, we might only just come into, if we do come in, to 416, or maybe even here, which is like 407. I remember we got above 407. So at this point, they didn't reject price at 393 like the bears would have hoped, and we penetrated all the way back into where we broke down from here. So we shall see. Is 431 another lower high? 479, 462, 431. Well, we shall see. It's been a nice move, and you got to figure out your time frame on how to how to approach it. If down here you are worried about, and you're in your, just say your 70s, and you're worried about long-term money, and you're jumping into your skis, how am I going to live? You know what? You better reduce into this spot, because why not get the cash if you're 70-something years old? If you're 49 like me, and you've just putting money in your 401k long-term, or my wife who's 46, or my nephew or cousin who's 36, then at some point in the next few years, some people say, like, Tom Lee's like, by Christmas, we're going to take out 479. Okay, who knows? At some point, we're going to take out this high, because the bull market always wins. It just matters in the time frame. But anyway, so we'll see how it goes here. Let's go back to the daily chart. So if you go back to the daily chart on the SPYs, coming into this spot here, and we have to figure it out. You go to the Qs. The Qs already hit the 8-day yesterday. So if you want to, take a close-up here in the Qs, there you go. Here are the Qs. Hit the 8-day yesterday. If you remember, tactically, this was your spot to really get long. You had a low, higher low right there, red dog reversal. And right here is really much where we took back the moving averages, and this dip proved buyable. Look at the potency of that up move. So now is 334 the high? Hard to tell. Yesterday we hit the 8-day, so now we'll see. So the question is, every single person and who was saying that Apple's done going up, it needs a retracement, Apple's down small. So I think Apple's going to be interesting today. Can they keep Apple down for a day? I don't know. I'm not long, I'm not shorted. I'm just saying that for today, if all of a sudden Apple opens down, okay, and everybody's shorting it because Carter and all these fast money guys all agree that the multiple is too high and this and that, and it goes green and it pushes above 176, it's going to be hard for the Qs or the SPYs to, to get down. And although I would also like to see, as an active trader, saying, hey, maybe it's overbought, the RSI is high, I also would like to see it move down to 170 or 166.90, in order to, to buy it better versus here. I'll either just leave it alone, or I'll wait and I'll watch it for clues for the Qs and the SPYs. So anyway, it's been above the 8-day this entire time. For any of you guys that read my book, you should not be shorting Apple then when it's riding the 8-day. It's a strong momentum trend. You pick spots to buy, or you try and swing it. So anyway, did go as high as 176.15 yesterday. What's yesterday's low? 172.57. So put 172.57 right there. That's the low. In order for these markets to really pull in a little bit, you're going to have to see a little bit of a move lower in Apple, which we'll see at this point. I think, what's Apple? It's down 75 cents. It's down 55 cents. Okay, so all I'm saying, again, why I was just asking him a question, I'm like, he didn't say sell it all, but Doug Cass did say Apple was rotten to the core, and that's what the headline was. And there are some investors that probably sold it there because he went short for a half a day, and then all of a sudden didn't get back in. So I hate irresponsible headlines. Anyway, I'm also looking at Tesla. Why haven't you had it in as a swing during this move? I did up until about 155, and then going into earnings, I just wasn't thinking that Apple was going to crush it. So, I missed the second part of the move. You could take out certain portions of it and be fine with it as an active trader. I played a lot of other things that did just fine. I'm at the highs of my year. Yesterday I made a new high on the year, and the market isn't. Okay, and that's on top of last year, which was a good year, on top of the pandemic, which I made 4 or 5 times my average year. So, it is what it is. Sometimes you're off base with a stock. I've been more in tune with Tesla. I've been more in tune. I was in tune with more with Microsoft. I was long the SPYs and the Qs, which was kind of like being long Apple. And I was watching Apple as a barometer, but thanks for asking. Anyway, here's Tesla. So Tesla's going to be interesting also, to figure out what type of move we have in the next week or so. Tesla got rejected into this 949.44. Is that a double top? Maybe. In order for that, it's got to keep it in check. Here's yesterday's low. Yesterday's low is 900. 900's right there on the 8-day. So we'll see, what does Tesla do here? Does Tesla break 900 and then all of a sudden start to fade again? That means that there's really not much momentum out there in tech, nothing to buy high and sell higher, because usually Tesla is like the poster child of momentum. Or it holds in here, and then at some point takes out 928 in this and continues, and that would mean the market's probably still on the move. So I would watch Tesla right now. I'm not long Tesla this second. I bought it on Friday. I bought a call spread. I calls on Friday. I created a call spread, and now I'd like to see it hang here, digest, and then there might be a real meaty move if this market wants to go higher, which is still a big if, depending on what's happening here in the tape. You do have Cisco, okay, pretty upbeat, right? Cisco is up a little bit. They were pretty, I guess they sounded good on their conference call. Like they seem like demand is strong, so that's good. Synopsys was good. So you have a little bit of cross currents, and you're at an inflection point. A lot of people did really well with this active sequence. There's still some people caught off sides, and I don't think anyone really knows what the next scenario is. All I said on Monday was, I think if you're trying to catch the next 1 to 3% in the spot in the S&P cash, chances are you can get a rug pulled down 4 to 7%. Some people are like, well, what do you mean 4 to 7%? I think we're going back to the lows. I'm like, well, first things first, you got to go down 4 to 7% before you go back down to the lows. Some people are like, what's the matter with you? What do you mean 1 to 3%? Tom Lee says we're going to all-time highs by December. I'm like, okay, well, then you got to get above the 1 to 3%. So I'm just giving probabilities. So that's what we do as traders. We look for high percentage plays using probabilities, where we try and take the meat and potatoes out of a move. If you're looking for the sauce, you're looking for the gravy, that can get real slippery for you, and that's not what's going to make you money consistently. It's the meat of the move. Am I trading SoFi? I got stopped out of SoFi yesterday. Yes, Red Dog took a loss yesterday. Why did I take a loss? You know why? Because it broke this bull type flag to the downside, and the trade changed for me. Okay, I was in there thinking, hey, you know what? I missed this part of the move. I could buy in here. Maybe it continues to the upside instead. That happened. So I got stopped out for a loss. That happens as a trader. I do not get louder when I'm wrong. I get stopped out and I revisit. I didn't get stopped out on pins yesterday. It was pretty damn close. It came to the gap area, so it's still holding there. So the reason why I'm in this is versus the gap, so I'm still there. So when you have multiple positions, so I had about 20 positions coming into this week. On Friday, I sold a lot into strength, and I got a little overhedged. Tuesday, I kind of also sold some things, bought some things back. And yesterday, I got stopped out of a few things, and I was able to make money on my hedges. And now I have a little less risk out there. Less risk to get squeezed on the short side, and I have less risk if we get pulled in on what I'm long. So now I'm more in a wait and see phase, where I just made a nice amount of money since the June lows. I'm back to the highs of my year. I'm going to Montauk tomorrow afternoon for a week. So I'm going to figure out how involved do I want to be or not. So you have to figure out for yourself, what are you looking to do? How much time do you have to allocate into the end of the last week or two of August? Where do you stand? Which is your time frame? And what's the reason why you're in something long or short? So this way you can do it responsibly. And that's all I'm saying. It's 6:50. I got to jump. Sorry, I did a little bit more story time than X's and O's, but sometimes, you got to just think of things in order to act accordingly, and there you go. I appreciate you. Thanks for tuning in. I will do a little bit of a video before I leave from Montauk. I leave from Montauk tomorrow afternoon. Let's hope the weather holds out. And when I'm in Montauk, I'll probably do a few small things here and there, and I might write a little bit of a note. I'll do a few little videos to say what's up, but I'll probably be mostly off the grid. Thanks for tuning in. I appreciate the 630 Club, and I love my Alpha team, and the Redler Report, because those are the guys that spend 99% of the time with me. You guys spend about 15 minutes, which is all cool as well. I love having friends around the world. Have a good day, guys.